But moving on, capital expenditures for the quarter were $22.1 billion, and for the full year, they were $72.2 billion. So Meta's capital expenditures are definitely ramping up. Then they show us that cash flow from operating activities was $36.2 billion for the fourth quarter and $115.8 billion for the full year. This means that operating cash flows were up 6% for the fourth quarter and 26.8% for the full year. Now, operating cash flow is the main profitability metric that I am currently focusing on because Meta is spending so much money on capital expenditures. So their free cash flows are being subdued massively right now while they are building out all of their data infrastructure. This is the same story for companies like Amazon, Google, and Microsoft. All of these hyperscalers are investing so much money into CapEx right now that I don't think that free cash flow is an accurate reflection of the profit potential of these businesses. So for the time being, I'm focusing on operating cash flow for all of them. And Meta's operating cash flow just grew by 28% year over year. So the amount of cash that Meta's operations are producing is growing and at an accelerated pace. And this is the same story with their top line. So I think that this is a clear indicator that Meta's investments into CapEx and into growth is actually paying off, and it is materially growing the business. Now moving on to the next screenshot. This one is the CFO's outlook for the next quarter. And here they say we expect the first quarter of 2026 total revenue to be in the range of $53.5 to $56.5 billion. Now the middle of this range is $55 billion in revenue for the first quarter, which would be year-over-year growth of 30%. So Meta is expecting the revenue growth rate to continue accelerating into 2026, and I think that this is the main reason why the stock is up. Analysts were also estimating $51.3 billion in revenue for the first quarter. So Meta's guide is beating analyst expectations by quite a wide margin. And again, I think that this is the main reason why the stock is up. However, Meta is expecting their full year 2026 total expenses to be in the range of $162 to $169 billion. They then said that the majority of this expense growth will be driven by infrastructure costs. They are also anticipating that full year 2026 capital expenditures, including principal payments on finance leases, will be in the range of $115 to $135 billion in 2026. So Meta is expecting their expenses and their capital expenditures to grow significantly next year. However, they say that despite the meaningful step up in infrastructure investments in 2026, they expect to deliver operating income that was above 2025. So they are expecting overall operating income to grow despite their investments increasing significantly next year. And I think that the initial sell-off to Meta stock after they reported their earnings was due to this CapEx guidance right here. Because think about it, they just did $72 billion of CapEx for 2025, which means that on the high end, they're projecting to nearly double their capital expenditures in 2026. But again, I think the acceleration to Meta's top line and its operating cash flow numbers are suggesting that these investments in infrastructure are paying off and materially impacting the business in a positive way. So if Meta can continue to see its business accelerate with all of these increased capital expenditures, then I think it will be a good thing for the business and for its shareholders over the long term. However, in the short term, earnings and margins and free cash flows are going to be impacted. So this is very much so a long-term investment